Interest rates in the world's largest economy may be hiked more than 3 times this year if price levels continue to rise. The comments from US Federal Reserve officials come after inflation in the country surged to 7% in December, its highest level in almost 4 decades. But higher borrowing costs could erode profits for businesses relying on loans. Moba Nasser reports.
May I put all these in a bag for you?
After getting laid off from her job during the COVID-19 pandemic, Thea Merle set up this grocery store in Washington, D.C. Selling an assortment of oils, sauces and other cooking ingredients, she hoped to become a household name in her neighborhood. But she says rising prices are making it difficult to build up her customer base.
We are striving to become like an everyday store for people, and I think as prices keep going up, it becomes more of like a delicacy kind of special treat moment, as opposed to like, oh, I know that like it's very affordable to get high quality olive oil right up the street.
Just down the street, cafe owner Alex Kramer says she's also struggling to procure supplies while staving off price hikes.
Of course, we will consider raising prices when we need to, but we're holding tight for a little bit. Things are still fluctuating. We're riding out the inflation the best we can. Sometimes we can't get product, so that keeps that cost low.
Supply chain bottlenecks have been limiting businesses' ability to produce enough goods and services to keep up with demand. That's driven up inflation in the country to 7% in December, which is the highest pace of price increases since 1982. The US Federal Reserve had earlier announced it would raise interest rates 3 times this year to tighten the money supply. Now it's considering even more hikes.
We know that high inflation exacts a toll, particularly for those less able to meet the higher costs of essentials like food, housing, and transportation. We will use our tools to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched.
While that may slow down the pace of inflation, many analysts expect commodity prices to remain high in coming months, and higher borrowing costs could further stifle businesses still struggling to recover from the pandemic-induced lull. Moba Nasser, TRT World.